Ladies and gentlemen, welcome back to the channel. AMC stock is down about 0.5% today. This is actually surprising considering what happened today. So we're going to go ahead and get into the data. We're going to look at the broader markets here because wow, things are not looking great out there, okay? The NASDAQ is down about 1.65%. The data we got this morning is mind-boggling. Just how is this even happening? We got a lot to get into. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section if you guys do have any. Thank you for tuning in, and let's go ahead and get straight into it. So like I said, AMC stock is down about 0.5%. Very, very strong day for AMC considering the high beta that AMC tends to have with the markets. Again, if markets are down over 1.5% on the NASDAQ, you would expect AMC stock would be down like 5 or 10%. No, I think it's because you've hit that bottom. AMC stock is down 0.61%. A very strong day for AMC overall. And not so much for the markets. Now, what is happening today? Number one, with AMC, Eric Wold, B. Riley Securities, he did it. He lowered his price target on AMC stock. He had a $45 price target on AMC, the highest on Wall Street. Lowered it to $15, still one of the highest price targets here on AMC stock. But it's weird because just on September 5th, before anything really changed, nothing has really changed from then until now. Boom, he lowered his price target. Now, what exactly did he say? He says, let's see. B. Riley's cuts AMC Entertainment's price target to $15 from $45 after AMC preferred equity units conversion, reverse stock split, issuance of new shares, and keeps a neutral rating. So, kind of what everyone else has been saying. And I think it's a positive thing overall that AMC is not down a lot more. It could be a lot worse. You're also seeing the put-to-call ratio continuing to fall today as the calls are well outpacing the puts. So that is another good sign here. But what's actually happening today is kind of crazy here as far as the data. So I'm about to blow your minds. The JOLTS job openings today came in at 9.61 million. Huh? You were expecting 8.8 million. There's 9.61 million job openings. I don't even know if that number is accurate. Is that even an accurate number? Because you just went up about 1 million jobs in the course of a month. This is what is sending down stocks. This is saying, hey, the Fed's going to have to be higher for longer. But I think really under the surface, there's a lot of banking fears going on and also recession fears. The higher for longer the Fed has to stay, even if it means we have a stronger economy right now than people expect, it ultimately means we're a lot more likely to actually go into a recession. That's number one. But look at the bond yields today. 10-year Treasury is soaring, up 10 basis points today at 4.78%. The 2-year Treasury is up 3 basis points today. So this is interesting. The yield curve is continuing to uninvert. Now, a lot of people won't give it to you straight. A lot of people have no idea what they're talking about in regards to the yield curve. Usually, when the yield curve is inverted, that's not too bad. When it starts to uninvert, is typically right before you go into an actual recession. Now, the yield curve can uninvert a couple ways, right? This way is a little unconventional, what we're seeing right now, where the 10-year is rising to meet the 2-year. So the higher for longer narrative is really playing out. Typically, you would expect the 10-year to stay high and the 2-year to start falling because the Fed's going to start cutting rates or something. The economy is weakening and they're going to have to cut rates. So the 2-year yield implies a lot of rate cuts. It starts to fall. It goes under the yield of the 10-year. Instead, it's now the 10-year that is catching up to the 2-year. Hopefully that makes a little bit of sense. This chart has not fully updated yet. Let's go ahead and see what the actual yield curve inversion is. So we have 5.14% on the 2-year, and we now have 4.78% on the 10-year. So you're actually only inverted about 0.36%. So you are rapidly uninverting. But again, this time is a little bit different because the 10-year is uninverting to the 2-year, not the 2-year, which typically uninverts to the 10-year. So very, very strange. Oil is up 0.66%. Oil has come off of the highs, but is again starting to recover a little bit. Now, what is most concerning to me is potentially another banking crisis that could be on the near-term horizon. Now, when bond yields go up, this affects the bond prices. So this is the bond prices. This is on the weekly chart for TLT. This is 20-year treasuries. This is the ETF. Now, what you guys got to remember, what caused the banking crisis, right, back in March was these prices for bonds coming down. Now, if prices for bonds come down and yields go up, typically that happens during a good economy. That happens as stocks are doing well. If investors are selling bonds, literally selling bonds, driving yields up, that money should be flowing into stocks, right? They tend to have an inverse relationship. That's why you have the term the 60-40 portfolio, because if you're 60% stocks, 40% bonds, if your bonds go down in value, your stocks should go up in value. But that's not exactly what has happened. Now, some stocks have done well, right? Your big names out there. But if you look at an equal weighted ETF, if you look at a equal weighted SPY over here, yeah, that's not it. Okay, though that's the NASDAQ equal weighted. But if you look at the S&P 500 equal weighted, you have not done anything. Okay. Let's see if I just pull up SPY. Yeah, close enough. You guys get the idea. It has not done anything at all. So banks, they're losing on their bonds. They're losing on their stocks. They're losing everywhere. And now they got to pay out 5% to people that are holding their money with the banks. This could be having a big effect on the banking crisis. The KRE is down another 2% today. KRE is starting to break down to important levels. If you start to break under where we are now, about 40, which KRE is at 39.88, there's a significant amount of stress out there. Oil, again, like we said, is up 0.5% today. But the dollar, look at the dollar again today. The dollar is up 0.74%. I would argue the dollar is the most important thing here because this has a direct effect on company earnings. Because if you have a high dollar, right, you convert your foreign currencies to less US dollars. That makes your earnings look not as good. It can help out earnings. Like in Q4 2022, the dollar falling from its highs definitely helped out earnings a little bit. And the dollar continuing to fall has helped out earnings a little bit. But here for Q3, the dollar is not going to be a helper to company earnings. So the higher the dollar goes, Obviously, the more implied kind of rate hikes you're going to see from the Fed, but the worse off company earnings are, guys. So very interesting what's going on out here. If we take a look at the Fed rate monitor tool, even though we're getting data that maybe suggests the Fed will raise rates again, you're not seeing it getting priced into the Fed fund futures tool or Fed fund monitor tool. November 1st, there is a 72% chance the Fed holds rates, 28.2% chance the Fed actually raises rates. So you're not really expecting the Fed to raise rates, even though you're getting data that the markets hate, implying the Fed might raise rates. Interesting what's going on here. Now, with AMC stock, again, AMC is doing much better than the broader markets. If you look at the option activity, about 22,000 calls in the money, 24,000 calls out the money, 7,100 puts in the money, out the money puts at about 44,000. So still a lot of puts or a lot of calls relative to puts. If we look at the FTD numbers, there's not too many here, but here and there you are getting some, a couple thousand here, and then you pop to almost 6 million here, and then 3 million here. So we'll see what continues to happen with the FTD numbers. If we take a look over here on Ortex, you will see a short score of 64, $177 million worth of short positions currently on AMC stock. 11% short interest of free float. Free float out on loan at 13.26%. Shares out on loan 26.23%. Days to cover 1.75%. Cost to borrow 2.74. And utilization of 54.25. Now again, it's important to remember as well. A lot of people say this seasonal kind of month of October is a good one. Sometimes it is, but sometimes it's very bad. Think 1929, 1987 and Black Monday. Think 2008. Think 2022. October was really bad months then. Those were the months in which essentially, you know, the dookie hit the fan, if you will. So it's not certain this is going to be a very bullish month. It's just not. So be a little bit careful out there. If you take a look at what's going on with the NASDAQ, if you break under this line, you're in a problem. For the SPY, you're already at that problem level, and you've broken under it. I mean, look at it. You broke under your problem level right here today. So it looks almost certain you'll hit the 200-day moving average. And then the question is, do you bounce from there? Do you continue to fall? Does the NASDAQ really just need to catch up to where the S&P is? Because the NASDAQ has been, you know, doing fine, doing well this whole time. Who knows? It's a good question. Let me know what you guys think down below in the comments section, guys. So that is going to go ahead and do it. It's not really too much else to actually say out there. I think the bigger story is what's happening to the broader market. So thank you for watching. If you guys want to get yourself some free stocks with Webull, link down below in the description of this video, as well as come join the trading community. Also, link down below in the description of this video. Thanks for watching. Enjoy the rest of your day, and I will see you in the next one.